Hello everyone, my name is Marcello Kolax and I am the Managing Director at Clever Markets. Today we're gonna have a look at European markets for the week starting 15th of January 2024. But before we jump into it, I just want to make you aware of the Clever Markets Technical Analysis Academy. So intake is now open until the 19th of February. We will launch the 7-week course on the 4th of March. And I am very proud of it because I like to believe that this is probably the best course on technical analysis that is specifically designed for European energy traders. So do stick around and I'll show you a little video later on. The course is truly unique because it is the only one that offers weekly one-on-one sessions directly with me. So everything you learn is immediately applied to your real markets. There is quizzes and exercises. Both of them are checked by me personally, so nobody is left behind. And of course, you do have unlimited analyst access. And if all of that wasn't enough, you also get complimentary access to the Clever Markets dashboard, which is our flagship product. So do stick around. And if you still don't know if this is the right thing for you, then definitely have a conversation with me and we'll figure out if this is the right thing for you. Okay, so let's have a look at the TTF. We see on the weekly chart, I'm just zooming out a little bit, that right now nothing has changed from last week. So overall, the market is still below the hammer at 35.06, and we are still below the 23.6% FIB retracement. So usually above these areas we see more extensive corrections higher, usually into the 50%, 61.8% range, but that hasn't happened yet. And as long as the up leg isn't triggered at 35.06, which is the hammer high, you can be a little bit higher as well, 36.18 with a 23.6%. As long as we are below this level, losses are still likely, and anything here is just considered noise essentially. But we would put the midterm downtrend on pause if we were to push above it. But ultimately, no matter how high you might go here, the idea is still for the market to go lower. And that is because we do see that the 8 and the 12 exponential moving average are still pointing lower. And we also see that the MACD is still giving a bearish signal. So overall, whatever happens here, the idea is still to move lower after all. And we see that on the daily chart, we are within this descending channel that has been active since October last year. And last week, we stopped making progress. So we had like 1, 2, 3, 4 candles of essentially indecision. And what I want to see is I want to see a move past this range here, 30.03, or let's say 30, and 31.82. Above it, we might have to put the near-term downtrend on hold, and we might have the chance of the market moving into a sideways range. Because can you see here, this is a little bit of a peak, this down here as well. So the market would then very likely start moving in the sideways range if we push above 31.82. However, if we move lower, below 30 immediately, we would simply continue the downtrend. So it is very important to have a look at these two levels. So we see on the MACD that while price was still moving lower, or now sideways, we see that the MACD was pushing higher. So that simply shows bearish exhaustion. On the stochastic, which is my favorite oscillator tool, we see that we have higher highs and higher lows. And we also get a bullish signal here. So that suggests that, we probably see a little bit more gains. So be aware of the potential sideways trend happening here. On the intraday chart, we are also in a sideways trend. The rectangle has been going on for most of last week. And we did briefly pierce above it. And overall, it does look pretty bullish, or for bullish resolution of the rectangle, because we do form higher highs and higher lows. We even pushed above it, so it's all looking well. We have rising volume on the up legs, so that is good. But what is happening on the tools? Well, the tools show us that the MACD stopped making new highs, and now we're even moving lower. And the MACD was not moving higher, well, the market still was moving higher. And stochastic doesn't really give us anything useful right now. I mean, anything imminent. So the idea here is, will we really make it? So for this morning, I believe that we'll probably open softer on Monday morning, possibly towards 30.92. That's the next big support area. If we move below it, then we could make it all the way to the lower rectangle boundary, but we are not quite there yet. So this is probably a more shorter term, very near term trading opportunity here. If, however, we push above it, and then of course above this peak here, 32.23, then we could essentially also resolve the sideways trend on the daily chart. I mean, we are still in a downtrend on the daily chart, but this congestion area, we would resolve this to the upside on the daily chart, and then we would see a little bit more of an extensive correction higher. So what's happening intraday this morning will be very important for what's happening in the next couple of days, maybe a week, on the daily chart. So do keep an eye out. And that is all for the TTF front month.
European energy markets have changed for good. No longer can we rely on the usual summer-winter seasonality, and once-in-a-lifetime freak events seem to happen every other month now. So what do? How do we stay profitable even in the most volatile markets? Hi, my name is Marcello Kolax and I am the Managing Director at Clever Markets, and also I am the host of the 7-week Clever Markets Technical Analysis Academy. We have opened intake now, and we will launch the 7-week course on the 4th of March. So do make sure that you sign up. Our graduates are able to spot trends early, plan trades effectively, and manage risk better. But what do our graduates say? Well, in 2023, we got a solid 5 out of 5 star rating across all categories, across all participants. We are also the only technical analysis firm that is about to be ISO 9001 certified, which is the global quality management standard. So you are in good hands. This course is suitable for beginner, intermediate, but also more advanced energy traders who already run their own fundamental models and look to make them more effective with technical analysis. Usually they can add trade triggers, directional confirmations, and targets. If this sounds like you, then get in touch. I'll set everything up for you. And if you're still not sure, then hey, let's meet up and you can talk to me directly, and we'll together figure out if this academy is the right deal for you. Until then, see you around and bye-bye.
Let's now have a look at European carbon emission certificates. So this was quite a dramatic week. On the weekly chart, we see that we have pushed well below the already descending trend channel. So that essentially means that we were already bearish, so we already had a downtrend in place, but the bears are really convinced now, so we probably could make it all the way to 60. So 60 is zooming out, is a level that was last hit in March 2022. So here it was 59.03, but we get the idea. Looking at the tools, we see that volume is really high and on the rise as the market is moving lower faster. We did get a bearish signal on stochastic, and we also see that the MACD is pushing lower. So everything is in favor of going at least towards 60, but to be completely honest, I believe the 50 is not too crazy. So I think that is within reach. One more thing. So I believe that we could move there in a straight line to 60 at least, but if not, we should find some resistance in this area, in the 70s, in the low 70s, high 60s, which is this old support level that could now offer resistance, which is also the old channel support that could now offer resistance. But either way, the idea is for the market to move lower. So we would be, this is very unlikely, but the downtrend would be truly undone if we move above 81.2, because then we would be starting making higher highs again. So but we would still be within the descending channel. So probably a little bit of a range. On the daily chart, we see, okay, we have a pretty good descending channel, and we closed below it on Friday. Here we don't have a good alternative case, and it really looks like we are going to continue the downtrend. And can you see how volume is picking up? I mean, of course, this has to do with this being a new contract, so this is completely normal. But even besides that, we do see that on the red candles, we are moving higher in terms of volume. The MACD is comfortably bearish, and any sort of like bullish crossover that we had a week ago. So you can see here, yeah, when the orange line crossed above the white line, %K crossing above %D. That happened a week earlier, but was pretty much undone already. And the idea is for the market to move lower also in the near term. So early this week, we could move below 64.73 and then very quickly make it to the 60 and even below that. The only tricky bit is the intraday chart for everyone trying to trade the smaller time frame. Because, well, a few caveats. First of all, we are within an intraday descending channel as well. So whatever we do, it kind of looks bearish. But here's the thing. So we do see that stochastic did give a bearish signal. So that would suggest some losses this morning. So one case would be immediate downside continuation below 64.76, and you could easily make it to 63.74, which is the lower channel border, so at least within this area, and then simply continue to swing lower. The alternative is suggested by the MACD, because the MACD is pushing higher, whereas price is kind of like still moving higher and a little bit stagnant. So this would usually mean bearish exhaustion, which could lead us to say, okay, maybe we do see some strength here, but ultimately the idea is still to continue lower. Zooming in, we also see that we did get a bullish signal on the 8 and 12 exponential moving averages. So what do we do now? So there's a few things that can happen. Immediate downtrend continuation. We first move higher and then continue lower, as suggested by the MACD. But if this case comes true, I want to be very careful at this resistance area, because if it is broken to the upside, then the downtrend channel would be put to an end and we would see some more gains. And if we see some more gains on the intraday chart, then maybe we see something like this on the daily chart, the market moving a little bit higher, but ultimately continuing lower. That is the idea then. But overall, it's just a question of timing right now. Overall, on the daily chart, if you're out for a trade that you want to keep open for more than a day, like let's say a couple of weeks or whatever, then this here, waiting this out might be not too bad. But yeah, as soon as we go below 64.73, then there's nothing in the way for the bears to simply continue. We could get a marginally better entry before continuing lower if we do get a bounce. But the idea for all three time frames is to go lower overall. Henry Hub has been quite dramatic last week, so we did see a strong green candle moving higher on really high volume. Oscillators are in overbought territory and the MACD is pushing higher. So all of this is the MACD, all of this is pointing towards more gains. But this is the weekly chart, and of course we do not trade on the weekly chart. We're only using it for like a rough guide of whether or not to look out for buying or selling opportunities on the daily chart. We also see, yeah, with the 8 and 12 exponential moving average crossing higher and us moving back into the ascending channel, it is looking pretty good. But here's the thing, it can get dangerous. So as if resistance at 3636 holds, which is the high from early November last year, if this holds, then we could have like a really wide sideways trend coming our way. So what we want to see is actually a break above this level in order for the market to reintegrate into the channel. I'm zooming out and we can see that this uptrend has been going on for quite some time, since April 2023. And this move below the channel first neutralized the uptrend and then turned it bearish. But now with the move in it again, we are bullish again for the midterm. But of course, once again, we do not trade in the weekly chart. We always look for trading opportunities on the daily chart. And now knowing that the market is bullish on the weekly chart, we start looking for buying opportunities on the daily chart, which of course has been going on for, what is this, 2 weeks already. But now we see that we have pushed above this congestion area here. And now the next level of resistance to take is 3.392. I personally believe that this could be taken because the stochastic, you could see, is making higher highs and higher lows. So this is looking good for us. We also see that the MACD is well above its zero line. And of course, the 8 and 12 exponential moving averages are pushing higher. If this wasn't enough, let's have a quick look at what the Ichimoku cloud is doing, because here we can see that we have pushed above the cloud. The lagging line is above the cloud as well. So we are bullish. That means we are looking for buying opportunities. And on the hourly chart, on the 15-minute chart, we see that the uptrend has accelerated once since the 11th of January. And this here seems a little bit unsustainable. And that is also reflected in the stochastic. So I expect for Monday morning for the price to move a little bit lower. We also see that the MACD didn't make any new highs while the market was still edging higher, at least somewhat, right? So this shows this bearish divergence on the MACD and the bearish signal on the stochastic, and also below average volume on the towards the end of the week. On the last up leg shows us that the bulls are a little bit exhausted, so a reintegration, a drop lower, like 1 degree lower, to this more sustainable pace here would make sense. One more sentence on volume. Of course, it was the end of the week and volume is expected to go lower. So don't read too much into it. But overall, the idea is still for the market to move lower. Also, as you can see, as the market moved lower here, we did see that volume started picking up, right? So on the down legs, we have higher volume that suggests some moderation, possibly towards what is this, 3.2. So on the daily chart, that would simply mean maybe a little bit lower, maybe a little bit of sideways at the start of the week before we continue higher. And this is where the buying opportunities would be. But of course, if you want to be sure, always wait for a push above 3.392 on the daily chart to capture the next up leg. There's no real target that can be given here, I mean, except for the peak from early November at 3.630, because we can't really draw any nice fitting Fibonacci extensions. There's nothing really, there's no there's no targets to be had. There's no good patterns here. Looking back, there's nothing really above 3.63. So the next important level would be the psychologically important 4. Okay, so that is it for Henry Hub this week.